Hello and welcome to BQ Prime. You're joining us on this special interview that we're having at the HDFC House in south of Bombay. And joining us today is Mr. Keki Mistry, the Vice Chairman and CEO of the company. Now, we are coming to this conversation amidst talks of the merger with HDFC Bank coming to a close. We're a few weeks away from the merger becoming effective. Mr. Mistry, just to begin this conversation, tell me how you're feeling after so many years leading this housing finance company.
I think we have to look at what is in the best interest of HDFC. Obviously, there is an element of sentimental feeling which comes in. It's been many, many years. But I think in the long term, a merger between HDFC Bank was imminent. It had to happen at some point of time because you can't have a situation where HDFC only does housing loans and bank does everything else other than housing loans. So it was imminent, and the timing was just right because of various reasons, regulatory reasons, where a lot of relaxations were given in terms of CRR, SLR requirement compared to what they used to be 10, 20 years earlier. So that priority sector lending requirement has been partly eased. All these factors led to a situation where the merger made a tremendous amount of sense. And fortunately, everything's going as per plan. Our original target, internal target at least, was July, though we thought it could stretch to August, September. But July was our internal target. And the way it's looking now, by July, hopefully, everything will be done.
I want to take you a few years back. 81 is when you joined HDFC Limited.
October 81.
Since then, since the early 80s till now, 2023, it's over 40 years now. What do you see has changed? Well, not just at HDFC, of course, companies evolved, but overall in the housing finance space, because you were probably the only one who set the tone.
A lot of things have changed over the years. In 1981, when I joined HDFC was a very small little company. And over the years, we've grown into a big, huge financial conglomerate with interests in banking, life insurance, general insurance, asset management, and very relevant companies, not just small companies, relevant companies in the respective sectors in which they are. From a housing finance point of view, in those days, in the early 80s, there was some amount of nervousness from people when they wanted to borrow money. Today, all that has changed. Today, there is complete willingness on the part of people to go and borrow money. So the reluctance to borrow money has gone away. That's number one. Number two, India's growth in the economy, in the global economy, has dramatically increased. I was in overseas a week ago, and I could see the amount of interest that is there in India today. There is a phenomenal amount of interest. Whilst many of the other countries are struggling as an aftermath of COVID, high inflation, social issues, and so on and so forth, India is set to grow and grow at a very rapid pace. And for that, we must compliment the government and the RBI for the role that they have played in taking India to the kind of level to which it has gone. So many things have changed. There is some competition in the market today, but we've held our ground. We in the housing finance business are usually a preferred lender because we don't just provide money. Anyone can give money. We provide a whole lot of value-added services, advice, and so on and so forth.
So why did you join this place, Bud? Because you were a traditional chartered accountant.
So I had three offers at that time. I had an offer from HDFC, I had an offer from Citibank, and an offer from a multinational company. Citibank offer, I thought the multinational I didn't want to join because it was a very specialized kind of business. Citibank, the choice was between Citibank and HDFC. I'm a finance man. I love numbers. Citibank, I thought, would be an ocean, a huge organization, massive organization. I would have a little small role to play in that. So I chose HDFC because HDFC was young, fledgling, growing at a very rapid pace. The need for housing finance in India in those days was paramount because there was no formal system in India for anyone to be able to avail of a housing loan. So I chose HDFC. And frankly, over 42 years, I've never regretted it. I've had other offers, many other offers, not one or two, many offers, attractive offers, paying me more salary, paying me more income. But the work atmosphere in HDFC all these 42 years has been fairly informal. There is a lot of comradeship. There's a lot of get-togetherness, very, very little of politics. So there is a good feeling when you come to work.
As part of this, creation of this conglomerate of sorts in the financial sector, right? Around the 90s, you started with a bank. You started later on with insurance, mutual funds.
Correct.
I just wanted to get a sense as to why you felt the need to go beyond this housing finance core business of
Yeah.
housing finance.
So in the 90s, the early 90s
Yeah.
was the time when the Indian economy really opened up.
Yeah.
If you recall, 1992 was the year when a lot of reforms took place.
Yeah.
And that's the time when the government permitted private sector companies to get into the banking business. We applied for a banking license because what we could do at HDFC was only providing housing finance. But we had such a strong band, such a strong bond, such a strong equation with our customers by that time that we thought that why only provide them housing loans? Why
Yeah.
not give them car loans, consumer loans, a variety of other products? And we couldn't do that from within HDFC. So we set up a separate entity, which was HDFC Bank. And then in the mid 90s, there was a committee which was set up. I remember it was called Malhotra Committee. And then by 2000, the insurance sector was open. So we applied for a license to start a life insurance company and got the license. And obviously, there's been no looking back after that. And then as the financial sector in India progressed, we got into all the different financial services business. So today we are in practically, not practically, I would say in each and every financial service business that is possible, whether it's banking, life insurance, general insurance, asset management, education financing, real estate funds. The only thing we are not in is a sort of a reinsurance company, which we, for a variety of reasons, never thought of doing.
Okay. I want to pick your brain a little bit about the housing finance business itself. Now, you practically wrote the rule book as far as housing finance as a business goes, right? In these 40, 42 years that you've been at the company, how have you seen this product evolving and the customer evolving in terms of how they're thinking of buying a house and at what point do they think of financing?
All right. So, as I told you in the beginning, 1981, when I joined, borrowing money was not considered a great thing. So there was hesitancy to borrow money. But gradually, as the economy kept opening up, people became more and more willing to borrow money. People became more and more choosy in their requirements, more and more needy in what they required from a lender. We started seeing competition get into the business sometime in the 90s. In fact, we created our own competition because Canara Bank, State Bank, couple of other public sector banks approached us and said that why don't we look at setting up a housing finance company catering to a certain segment of the geography, and you participate in that with an equity infusion and maybe provide some advice. So we did that. So we, in a way, created our own competition. Where in the world do you see an entity
Why did you do
creating
that
its own
then?
company? Because we thought that the market was so large, and even today it is very large. Even today, after all these 40 plus years, the housing market in India has phenomenal scope to grow, phenomenal. The runway ahead is very, very long. After all these years, the penetration level of mortgages has increased from about 1% of GDP, which is when I started meeting investors in the early 90s, to about 11% of GDP today, 10.6, so let's say 11% of GDP. Globally, if you look at it in the Western world, the mortgage to GDP ratio is upwards of 40%, 40%, 50%, 60%, even 70% in some countries. India is only 11%. China is in the 20s. So look at the penetration level that, or the scope for the business to grow in the years ahead. It's a phenomenal runway ahead. Also, the average age of a first-time home buyer in India is about 37 years. In the earlier days, it used to be in the mid 40s. Today, it has come down from the mid 40s to the late 30s, or mid to late 37, 38 years. And two-thirds of India's population, we know, is below 35 years. So there are so many, two-thirds of our population today who have not even thought of buying a house. But every single year, you're going to have that many millions of people who will get to an age where they will need a house. So there is a structural increase in the demand for housing, and therefore housing finance in India over the next not 5 or 10 years, but in my view for the next 20, 30 years.
Okay. Tell me a little bit about the organization's milestones of sorts. Now, what would you point out as some of the biggest corporate achievements?
So when we started in the 80s, and I would say not so much in the 80s, but in the early 90s, when foreign investors started investing in India, we used to tell our investors that we have certain specific goals that we set for ourselves. Our one goal at that point of time was to increase our return on equity by 100 basis points a year.
Okay.
And if you look for a period of nearly 12 years in the 90s, every single year our return on equity rose by 100 basis points. Then when we became a financial conglomerate with life insurance, general insurance, asset management, banking, that became difficult to do because we had to carry high buffers of capital.
Yes.
So that was at that time one objective. Our second objective was operational efficiency. We said we will do everything possible to make sure that our cost income ratio is less than 10%, single digit cost income ratio. And we managed to maintain that for over 20 years now. Our cost income ratio is single digit. Nowhere or very rarely in the world, forget India, forget Asia, very rarely in the world will you find a retail organization with a cost income ratio as low as this. And third focus was on asset quality. From the time we started in 1981 till today, or 77, sorry, HDFC till today, our total loan losses, money we've had to write off on individual loans. Construction finance is more, but individual loans is only 4 basis points of what we disbursed. Cumulative losses in over 40 years is 0.04% of what we disbursed. That's the quality of the loan that we carry and also reflects the honesty and the integrity of the average Indian. Then the other goal was asset liability management. We had to make sure that we don't take mismatches, whether it's on the currency side, whether it's on the maturity, on the duration side, or whether it is on the interest rate side. So that was one objective. Customer service was a very big objective of ours. So we had set for ourselves these kind of goals.
Tell me a little bit about what you will take back. Last year when I spoke with you, you said that you're planning to take a break once this merger is completed. What is it that you'll take back 42 years at HDFC?
So there are many things one can do. One is to sit back after, just now that there is so much of traveling.
There's so much work on the table.
Work and so much of hectic traveling also ahead last 2 weeks, next 2-3 weeks. But once things settle down, one can sit back and think whether one should do something entrepreneurial. There are thoughts in my mind, not yet sort of crystallized, so I don't want to discuss that now. But I will be on the board of several companies. I'll be on the board of the bank. I'll be on the board of a couple of HDFC subsidiaries, and I'm already on the board of TCS. I'm on the board of Flipkart. I'm on the board of Torrent. There are a few other companies which have come and said, be on our board. I'll examine all of that.
All right. So I would like to take a walk with you,
sure.
and we can discuss a little bit more about the merger as well.
Sure.
Come. All right. Now we are here with Mr. Mistry at HDFC Limited's accounts department. Mr. Mistry, I want to talk to you a little bit about these two large organizations that are merging together, right? HDFC Bank and HDFC Limited. One is a multi-decade-old housing finance company. The other is also a multi-decade-old bank. What is the scale of this merger that we're talking about?
The scale will be massive. The scale will be huge, whether it's in terms of total assets, whether it's in terms of total deposits, whether it's in terms of the market capitalization, will be huge, enormous. And then the subsidiaries, which is HDFC Life, HDFC Asset Management, HDFC General Insurance, the HDFC Capital Advisors, all of that will fall as subsidiaries of HDFC Bank. So enormous scale. Huge potential in terms of cross-selling, massive potential in terms of cross-selling, because today the bank has something like 8 crore plus customers, and only 2% of them have taken housing loans from HDFC.
Oh, okay.
5% have taken loans from other banks, and roughly 93% have not taken a loan at all. So look at the ability to cross-sell to the 93% who not taken a loan at all, and to the 5% who've taken loans from other entities. Similarly, at HDFC Limited and all our subsidiaries, the number of people having banking accounts or banking relationship or primary banking relations with HDFC Bank is far lower than where it could be. So there is a massive cross-sell opportunity.
What do you say as a piece of advice to whoever is going to manage now this housing finance portfolio going ahead within the bank?
Advice is that the growth will always be there. Never focus only on market share. Market share is important, but most important is to make sure that you set for yourselves clear goals, goals on growth, goals on asset quality, and make sure that these goals are always met. It's not difficult. It's been done for so many years, decades and decades. It can continue being done for several more decades. And I believe once the merger happens, the growth potential can only increase because of the ability to cross-sell. Last year, for example, on the retail book, on the individual book, HDFC grew our individual home loan book by 17% on a large base. This is with less than 30% of our business being sourced by HDFC Bank. Now, going forward, the amount of business that can be sourced or that could be sourced through the HDFC Bank network can be huge, which therefore means that the growth potential once the merger settles, let's say 3 months, 4 months into the merger, the growth potential can be enormous.
Okay. I want to start wrapping this conversation up with your views on the broader housing finance sector, because that space is now getting super competitive. You've got banks coming in with ultra low interest rates. Even in a high rising interest rate cycle, they're still cutting down rates. How does this board forward the
First
market?
of all, let me tell you that the market scope is so huge. The growth opportunities are so massive that no bank, no housing finance company needs to do anything which is irrational.
Okay.
The reason rates have come down a little bit compared to what they were earlier, and they've not come down much, is because there is sufficient liquidity in the market today. And the perception, which I fully agree with, is that interest rates have peaked. And going forward, maybe in the latter part of the year, we could start seeing some reduction in interest rates from the policy front. So that is the only reason. We have been in this business for years. We've seen competition. We've always seen competition. It's not that there is no competition, but we've been able to hold our own in this competitive environment, growing at a rate which is faster than the market. Not for 1 quarter, 2 quarters, 4 quarters, 8 quarters, but if you look at the last 3 or 4 years, quarter after quarter, you will see that the pace at which we have grown our individual home loans is more than what the banking system has grown the home loan book by. So whilst there is competition, there is enough scope to grow. No one does anything irrational in this market simply because the scope is so large. No one needs to do anything irrational.
Right. I'll wrap this up with one last question on what do you think is the legacy that HDFC Limited is going to leave behind once it becomes part of the bank?
I think customer service, the fact that we've been close to our customers, we've guided our customers, we've engaged with our customers, we spend time with our customers when they come for a loan. It's not just a product that you sell and then say, all right, we got the product now, forget about it. So there's a lot of engagement that takes place with the customer. We matched our balance sheet very well over the years. And because we have a matched balance sheet, our profit growth is always very predictable. If you take year after year after year, you see that our spreads have moved in a narrow band of 10 basis points. That's a very narrow band for spreads to move over all these 30 years. Spreads have been in a narrow band. Net interest margin has been in a narrow band. Profit growth has been continuous. There has never been any year in the 40 plus years of HDFC's history when our profit in any year was less than what it was in the previous year. Not a single year. So consistent growth in profit. Consistency. I would describe HDFC's journey as consistency with a huge focus on customers.
Consistency with focus on customers. That's a legacy. Thank you so much, Mr. Mistry, for joining us in this conversation.
Thank you. Thank you very much.